We're live now,
You think we're live now?
I think we're live.
Don't know
now.
what to do. Hi, this is Michael Waitze, and welcome back to eCommerce Undercover. I think we're live. We're
I
live?
think we are definitely live, Michael.
Martin, it's great to have you back.
It's really great to be here with you for a new episode of eCommerce Undercover. I'm very happy about that.
Super happy about it. Can you tell about how long my hair's getting?
I think, yeah, it's getting pretty long, actually.
It's been like 3 months since I got my haircut.
Really?
I don't know why. I'm just growing it out. I want to compete with your hairstyle.
Oh, okay, yeah. But you need still some
Yeah, just a little bit. I don't think I'm ever going to get there.
Maybe not. Maybe.
Do you want to make fun of my glasses again? Because last week,
No, that's
you
fine.
really went after it.
That's fine. I didn't
You
do
sure?
it for you.
You have other jokes for me.
I have a new joke.
Did
for
you write them down? Is that what you're looking at on your
I
phone?
make a list of all the
You made
jokes
a
for
list
you.
of jokes.
So I don't forget them. It's important, you know.
Does anybody think this is going to be funny? Okay. Let's talk about e-commerce, as we normally do, buying and selling e-commerce sites.
Yeah.
An interesting concept, right? And I want to talk about it in this context. In December of 2020, a group of, I would say, kind of killer entrepreneurs, people with a lot of experience, particularly in the e-commerce space, started a company called Una Brands, which frankly I hadn't heard of until,
Same for me.
had you?
No.
No?
Until I saw this article.
Until I saw the article.
Yeah.
Actually, I didn't even see the article. You sent it to me.
Yeah.
And I hadn't seen it yet.
Mm-hmm.
Yeah, anyway. I guess the place where the article was, I just don't read that much. But anyway,
I don't know.
doesn't matter to me. But last week they announced, and this surprised me, right? They announced that they raised $40 million. 40
In seed money.
in seed money.
Yeah.
Now, there's equity and debt here.
Yeah, true.
But still,
But
seed money?
Yeah.
40 million bucks? What is this?
Like, when I saw that for the first time, I was like, that's big for a startup, right? Like, when you...
In Asia? In Southeast
in
Asia?
Yeah. Have you seen another startup raising that amount of money so early in the process?
Not in this region. So
Not in
it
this region.
reminded me in a way, and I can't remember the guy's name, but there was a guy who's built a startup in the United States, sold it. I think he was like Sequoia funded or Kleiner Perkins funded. And this is now almost 10 years ago. And he sold that, and the venture capitalists who invested in it made a ton of money. I mean, one of these like 100, 200, 300 multiples kinds of things. So this guy came out with this new idea, and he called it Color. And it was meant to be like a proximity-based social media company. And he raised, literally without having built any technology, something like $46 million
On nothing. At
on,
first.
on the idea.
Just the idea, yeah.
But the
And-
reason,
and himself.
and himself. And the reason why was because the VCs had already made so much money on him
Okay.
that even if they lost all $46 million,
But it was still profitable.
still way ahead.
Yeah, thanks to the previous deal.
Right. So nobody cared. So when I read this, I just thought,
You thought about that?
it just jogged my memory.
Maybe, actually. I don't know what they were doing before. They were in the world internet.
Yep. Rocket Internet,
So
which has made a ton of money in the last 10 years, right?
Which definitely
The Sommer
did.
brothers.
Yeah,
I never
definitely.
pronounced that right.
Yeah, they're German guys.
They're German guys, so I just don't know how to pronounce it right. But they did make a lot of money. They've done an unbelievable job building ventures,
It's
not just in
crazy.
Europe, but even in emerging markets, right?
Yeah, and the biggest one we have here is the Lazada in Thailand. So
Right, so Lazada, Zalora.
Yeah.
I mean, you can go to the Middle East and stuff. They're starting to build things in Africa. I mean, these guys are just amazing. And they're relentless executors. So the people that come out of Rocket Internet,
they know how to execute, definitely.
they generally tend to know how to execute.
That's why when I saw this article, my first question was like, $40 million, that's like a lot of money for a startup, especially at this early stage.
Right.
But I was like, on the other end, I was like, there are X for what is internet, and we know like how it works, right? Like they get
Right.
a lot of money,
Tons.
and then they kind of like an economy of scale for startup. That's kind of the way I read this myself, because like if you have a marketing team who work on the marketplace, why not get them to work on 2 or 3 others, right?
Right.
And if you build one marketplace on the tech side, you can maybe use 60 or 70% of the same code
Exactly.
to another one for something else or
Exactly.
in another market.
Exactly.
So it really made me think about economy of scale.
Scale.
It's for startup. So when I saw like that they had so much money, they
Right.
raised for 40 million.
Yeah.
I think they can achieve this idea of economy of scale for the Una brands, for buying and then scaling these e-commerce brands.
Right. So I think it's kind of binary, actually. In other words, they're either going to scale really fast and succeed, or they're going to scale really fast. And this is not just true for this venture, but for most ventures that raise that much money early,
They get to be fast.
they're going to grow too fast and then just sputter out and die. I don't think that's going to happen here. We can get to that in a second, right?
I hope so. I hope so. But you know, like we both built our venture without raising funds, and we did our first and one stuff like that, right?
Right.
But like all the process during the early days where we don't have much money, but we get to learn the world and the process and everything. I think that's kind of important. So when you get directly to the point where you get so much money and the team and everything, but you don't have this 2 years experience or 3 years experience of running the business
Right.
on a daily basis.
Right.
I think this can be a problem. Like this can make a difference.
In some cases, I don't think if you've been through sort of Rocket Internet University, I think it's unlikely that those issues are going to arise. And these are seasoned, like I said, pretty killer entrepreneurs.
Yeah.
What's really interesting to me, though, is that you have people out there. I think it's Reid Hoffman does this podcast called Blitzscaling.
Okay. Yeah.
But if you go back and look at the way he built his LinkedIn venture, right? It didn't blitzscale.
Okay.
But I think the people that perfected this were Rocket. And if you look at the founding and the building of Lazada, still not profitable yet, but maybe on its way. I don't know. Again, in the e-commerce space, we've already talked about this. I don't know what the numbers are, but I do know that I know the people that were actually there at the founding and hiring in Thailand. I think they hired 200 people in a month.
Imagine, that's crazy, right?
And that's blitzscaling.
Yeah, definitely.
For every function.
Definitely, like.
Right?
Yeah, and that's true. You're right. Like, they have this culture at What is Internet, like to blitzscale everything and to be so fast at everything.
Yeah.
And of course, we fail some company, of course, right? But we have some few, like Lazada, for example, or Overone. We have Zalando in Europe that is really big and really famous there.
Yep.
And yeah, they just do everything super fast and super big, right? So it really made me think about that. Like the CEO of What is Internet Asia raised that amount of money in seed, and yeah, it made me feel that we can do the same thing for e-commerce brand.
I don't know what I'd do if somebody gave me $40 million to build my business.
I have no idea how I'm gonna spend the money, to be honest, myself in my business.
I definitely don't need that much money to build.
Like even 1% would be like enough.
But what they're doing is different, right?
Yeah.
And they actually need capital. So let's talk about this. What are they going to do with that $40 million? What is this business? Is it Una? I guess it's Una Brands, right?
Brands, maybe.
What are they going to do with this money?
So they want to buy e-commerce brands and then scale them. So I'm not sure if they want after that to resell them or keep them. I don't know. But yeah, of course, at first they need initial capital to buy the brand from entrepreneurs who created that. Their statement is that some entrepreneurs, they like to start something, they like to get this to a certain point, but after that they don't like to hire the people and scale everything, because it gets into a different business. So this is where they come in. They come at this moment and say, hey guys, we're gonna buy your business and we're gonna scale it ourselves, right?
Right.
So this is where, to me, the economy of scale comes in. So because if they focus only on e-commerce, they can then have like the team that can manage a few brands and stuff like that. So it's almost always the same work. So they can be smart there, but they definitely need capital to buy the brand first, and then invest into marketing, invest into like all the logistic parts and all of that can help the business scale. So
when I first started getting involved in the startup ecosystem in Southeast Asia back in 2011 and the beginning of 2012, I invested some money in a company called Ardent Capital.
Okay.
And the founding idea of Ardent Capital back then was, let's take all the experience that we had building in Sogo and building ad networks and doing some other things that have been pretty successful. And then we know e-commerce is coming. Right, this is back in 2012, so almost 10 years ago. And they said, let's raise, I think it was about $10 million.
Okay.
Let's get some LPs and let's invest in a bunch of e-commerce sites. So they wasn't buying them like this.
Just invest.
Just investing them. But you have to understand the founders of Ardent Capital, right? So the key three founders, well, there were 5 key founders, really. The Savernakun brothers, who built in Sogo. Adrian Vanzel, who was the CEO of Ardent Capital. And Pierce as well. So Pierce was the CFO and kind of the finance guy, but also an idea guy too. But a killer team. But one of the things they realized back then was that when they went, and just gets back to what you were saying, when they went to look at e-commerce companies back then, there was no Zalata, there was no Zalora. It was really early. They saw the same things that you're talking about.
Okay.
So they saw people, entrepreneurs going, I'm going to start an e-commerce site. And they'd build it and they'd get customers. But as they started to grow,
it was good. And
they were blowing up because they couldn't scale. And what they realized was like, I think the number was like $500,000 because their apartment or their office was also their warehouse.
Mm-hmm. Yeah.
And that just does not work. Right, so it's fun to start it. You've got a bunch of boxes on the ground there, right?
Yeah, because like
no barcodes anywhere. Go ahead.
And I think there's a lot of entrepreneurs who just like that.
Yeah.
Just like, to start something out of the blue, and they get their apartment. That's their warehouse. They are sleeping
with boxes. Right.
This is fun, right? This is fun.
It's a lot of fun. It's like being in college and having all your furniture be like milk crates. You know what I mean? And putting your stereo on top of that. It's the same idea.
Definitely, and this is fun. And most of the entrepreneurs, they just want that kind of fun, right? And if you tell this guy, man, you have to have an office and to have employees.
No interest,
and you
right?
got to go there from 9 a.m. to 9 p.m. Yeah, that's fucked up. Like those guys, they don't want to.
They don't want to do it.
So that's why it makes sense to come to a point where those guys don't want to handle the business anymore, and just tell them, hey guys, now you can give it to us, so we are the corporate guys, and we're gonna scale it.
Right, and that was the whole idea behind the founding of eCommerce. Okay. They actually went out and looked at all these businesses, maybe 50 businesses. I don't remember how many back then, and they said, none of these are going to scale, but they all have the same problems and the same issues. Yeah. So let's build a company that's an e-commerce facilitation company. So not this idea, but kind of the back end, like you said, third-party logistics, all the warehousing, all the ERP stuff, right? And also managing websites, building their websites, doing the SEO, doing the SEM, right? All that kind of stuff, so that the sellers just had to focus on getting the best products and getting sales.
Yeah, that's it.
Right, so that grew into a big business. And there's competition there. So I had Enchanto on my show a couple of weeks ago. But this is different, right? This is like kind of like a boutique M&A business for e-commerce, no?
Yeah, definitely. And actually, like, this is really fun that they do that now, and there is so much money, because if there is so much people who believe into them for doing that, it means that there is a chance that it works, and actually it might be the perfect timing for doing that right now. So that's very interesting that you tried that 10 years ago. And actually, where did it go? What was the final word of the story?
So the e-commerce business has like 3,000 people in it. It operates in a ton of countries. It's a massive business now. And they announced, I think at the beginning of this year, at the end of last year, that they're going to try to IPO either on the Thai Stock Exchange or somewhere else. This is a massive business.
What about Arden Capital?
So Arden Capital then, because... And my memory's a little bit shaky on this, but because they built this e-commerce business, they stopped investing in e-commerce sites because they knew this was going to be the way to get big.
Okay. So they stopped.
So they stopped doing that. They built a few things, and then they actually sold that portfolio to another venture capitalist.
Okay, makes sense.
Right?
Makes sense. Okay, but I talk to e-commerce people every day, right?
Well, that's your whole thing right now.
That's my business with DrTech, right? Like right. Where like I'm helping people to build their e-commerce websites. So like I'm talking to them every day, and I see that there's a few key problems that they have that company like Una Brands can definitely help.
Like what?
Like for example, something that we may not think about, but e-commerce people who start to scale mainly from ads. They have a cash flow problem, a very important cash flow problem, because they get to invest into ads. Then they get the money through Stripe or PayPal most of the time. Those companies, they keep the money for like a week before they send you. But in between, you get to pay for the supplier. We're going to ship to the end customer. And if you scale, like if you go from like let's say $100 in ads a day to $1,000 of ad a day, you need this cash flow to be here just to be able to invest, right?
Right.
So if you are making sales, it's profitable, but you cannot scale just because you don't have the cash flow. So like 1 year ago,
go ahead.
And after I let you say what you want to say, but like 1 year ago, we talked about that with some friends. We were like, let's gather some like 200, 300, 500,000 euros and just invest into those guys who are scaling and just have a cash flow problems. We just fix that. So we just invest into the marketing.
So you did this?
No, we did not.
Okay.
Because we didn't see like how we could make a lot of money out of that. So maybe we were stupid back then.
No.
But
So the thing I wanted to do when I was thinking about interrupting you a few minutes ago is that there is actually a business that does this already.
okay.
I can't remember where it was founded, and I don't remember the name off the top of my head, but they raised $100 million or some large amount of money
And we just
to do just this, to help with that, not just with that cash flow problem, but the idea that they know that you can scale.
Yeah.
They'll pay for your marketing,
Yeah.
and in return for that marketing, they take either a percentage in your company,
Or they take a fee on
or they
the-
take a percentage of sales or percentage of profits.
Yeah. That was.
It's a great business. You can just keep growing. So
Yeah.
the other thing I wanted to ask you, though, if you know this, I don't know exactly, is that what is the relationship between ad spend and conversion? In other words, is it linear? In other words, if I spend $100 and I can get $200 back,
It's not.
if I spend 1,000, do I get 2?
It's not.
What is it? Exponential? Like what is it?
It's.
Or is it multiples?
Normally the way it should work is the more you invest, the less conversion you have, because
But there's got to be an inflection point, no? In other words, otherwise you wouldn't spend more money.
it depends.
Tell me.
If you spend at first, let's say you have a ROI of 3, like you spend $100 and you make 300.
Yep.
And you have 200 profit, right? But like after all the expenses, you still have 100 profit, right?
I understand.
Which means that you could actually spend up to $200 with the same with the same revenue.
Yep.
Does that make sense?
Yep.
So it doesn't really matter like the multiple that you get. There's just a break point where you are not profitable. So like most of the time when you do some ads, at first you have like huge ROI because like those marketing platform, for example, like Facebook, they are going to show the ads only to the right people. But the
Right.
more you spend, the more exposure you get. So so you start to get people who are a little bit less preferred for your product, let's say, qualified. And also the more you spend, and one day Facebook just run out of people. So it doesn't show the same ads to the same people. So you pay for that, right?
But maybe you have a product problem. Here's,
What do you
I don't know how deeply I want to delve into this because I want to talk a little bit more about this buying and selling. But what I think though is that, and we know people that do this, is that if you can launch a profitable kind of new brand website that sells a specific item or related items, and you figure out how to do ad targeting, whether it's using AdWords on Google or Facebook's advertising mechanisms, right? And
That's
targeting.
That's the two most widely used. Yeah.
I mean, that's where everything is, right? What it means to me is that then you can just make another brand
Yeah.
unrelated to this, right? So this can be
And
just for flower goods,
Just
pots,
something else.
things you dig
Definitely.
with, gardening stuff, right?
Yeah.
This can be just like belts for men, and then you can
Yeah.
just have watches, all separate, completely different names, completely different brands. It doesn't even look like they have any relationship with each other. But you could do 3 or you could do 300,
Definitely, you can do that. Yeah.
right? And then you target until the point where you feel like you've saturated your market,
Yeah. And you just launch a new brand.
and you just launch a new brand,
Yeah.
not to compete with this brand,
Yeah.
but just to sell different things. So let this
Listen.
run, keep tweaking it, maybe change up some of the products, but the category stays the same.
Yeah. And then you can just like set up new product, for example, like do some season like sales or something like that.
Right.
So that you keep selling to the same customers, and you can build on this brand. And after that, as you say, you can launch a few others websites,
Right.
but gonna sell to the same customers, but another product, right? So that's definitely, I think, what successful e-commerce people should do, because it definitely makes sense. And once you figure out the whole logistics, well, let's just do that again.
Yeah, exactly. But again, none of this is new, but it's a different iteration on an existing idea that's really good. I want to ask you this though: is this buying and selling of new brands or strong brands that are coming along? Is this a thing? Or did these guys at Una Brands invent this? Like, is this already happening?
Yeah.
This is new. This is not new.
No, it's not new at all. It's been here for a while.
So who else is doing this?
I I don't know. I don't have the name, but Shopify does it.
So Shopify has a platform.
They have their own marketplace where you can buy and sell Shopify stores. So they check first before putting the product on the marketplace. They check the numbers and stuff like that.
Right.
It's great because the numbers are on Shopify, so they can say it's the real numbers, right? So.
But do they have the right to disclose those numbers, or the seller? Let's say I build a website on Shopify.
Yeah, they ask you.
So they ask me first. They say, "Can we list your business there?"
Yeah.
And who are the buyers, though?
It can be just you and me. We can go on the marketplace and we can buy.
But let's say this happens, right? Let's say I start a killer website.
Mm-hmm.
I start selling a bunch of watches that no one's seen before. I turn it into a good brand. And then Una Brands or Shopify comes to me and says, we want to buy your $5 million of revenue. Yeah. I'm like, this is awesome. If I get a 7 times multiple or even a 3 times multiple, 15 million, 35 million bucks, that's real money. Mm-hmm. Right? And let's say it took me 2 or 3 years to build this. That's a good exit for me.
Definitely.
And it's not even like a famous fancy exit. It's just like this quiet transaction that happens in the background, right?
Yeah.
Now, maybe if you're Una, you want to publicize the fact that you're a good buyer.
Definitely want
so maybe they do throw that out there on the internet, right?
Definitely.
But if one of the problems that you mentioned is that I don't want to scale. The fun part for me is building up into that point.
Yeah.
So what do they do to keep that brand going?
You mean the buyer?
Yeah, what are the buyers? So Una Brand, anybody who buys these businesses, because if I leave in this example.
I feel it doesn't really matter.
But then who runs the product though?
Oh, most of the time they suppliers. I think they're gonna focus on brand, but of supplier. Like for example, they're not gonna take someone who is making his own belts. They're gonna take someone who's buying the belt somewhere, so they can just outsource everything. So if we remove the guy, it doesn't matter. And there's a lot of very profitable e-commerce store, but if you remove the guy, that doesn't matter. Just like the guy doesn't add a lot of value to the business. He was just here to start and to find the idea and to show it works. And he enjoyed the benefits, but after that, if you remove the guy, it still works. And I have a lot of friends who do that. They launch the store, they put a team on that, and that's it.
So they don't even do it themselves. They hire a team.
Yeah, they hire a team.
And are they building just to sell?
No. They just to take the profits. They don't sell the store. They keep it for themselves.
Just run it as long as they can.
Yeah, and it generates income monthly. Perfect. Good.
So what are we doing?
What are we doing?
What are we doing? Should we stop talking and start building? No, but this is really interesting. How do you know, though? Let's say the numbers aren't disclosed. Mm-hmm. How do you know if you're Una Brands? Shopify has a sort of inside information.
Yeah.
Right, because they can see all the traffic on your website. Even Amazon can do this, right? Because through their AWS infrastructure, they can say, wait a second, either there's a ton of traffic on here for no reason. Yeah. Maybe it's a denial of service thing. Or there's a lot of traffic to that website, so they must be selling a lot. Mm-hmm. So they have that inside information. But how do you think other companies like Una Brands gets that inside information and then can figure out what their long-term advantages are and what's a strong brand? Like, how do you know?
I think they must find a way to get this insider information because, as I say, like they are not alone here, right? There's other player. This is not only Shopify. There's a few other companies
that do this.
Like they don't buy and sell brands. They just facilitate the transaction between the buyer and the sellers. So I think my observation of that is that Una Brands get to find the good deals, right? Because if they don't find the good deals, or if the good deal doesn't come to them, like I don't see how the business can be successful. But if you want the good deals, you get to have some kind of insider information.
Some edge.
You get to have this information that even before the guy want to sell, right? Because we both know that the best startup are not the one you sell, it's the one that somebody buy, right?
Right.
So I think that's the same for e-commerce. If a guy is looking everywhere to sell his brand,
nobody wants to buy it.
There is a problem, right?
Yeah, nobody wants to buy it.
It doesn't say you want to sell. How does Una Brands know that the guy is a good deal? So this way for me, it's very, very hard for them as Una Brands if they don't have deals with Shopify, with Amazon, or with anybody. We could give them some insider information.
Right.
I think they don't have any chance to be successful. They never have the great deals. because they're gonna be somebody who's gonna have the deals before them.
Right, and at some point, your connectivity to, like, you may know the first 5 guys and gals that run great businesses, and you can buy them and maybe make a big flashy announcement
5, 10, yeah.
in the Wall Street Journal or in TechCrunch. But what do you do after that?
Yeah, what do you do after that?
Right, so they must have some kind of edge. I think the only way to find this out is to get one of the founders on the show.
Yeah, definitely.
I got a ton of questions for them. So if you're listening, come on the show. We'd love to have you. We have a ton of questions. But this seems to me like a classic kind of arbitrage. Right, I come out of a trading background, a securities trading background. So to me, this seems like an arbitrage opportunity where something is undervalued and there aren't a lot of people looking at it initially. So I can pay a fair price for it and grow it into a ridiculous price and either resell it or just grow the revenue so much that I'll never want to sell it. But we know that all arbitrage opportunities revert to the mean.
Yeah.
Right, so if there's a gap here between like what you're willing to pay and what it's really worth, the more players that come into the market to do this business, the more the risk is that what happens to those prices? They get bid up, right? So
Definitely.
there is a risk that they'll pay too much for this.
But I think it's too late for the arbitrage right now. I think it was good to do arbitrage a few years ago.
Right.
I think right now it's too late because there's too much players to invest. Just the fact that Shopify as a marketplace on their
There's a
website,
listed marketplace where this happens.
where you can just buy and sell Shopify stores directly on their website. It shows that they thought about it like years ago and they launched it already. And yeah, I think that's too late nowadays for the arbitrage. That's my point of view. I think what their edge is if they can find the good deals and if they can just scale it thanks to their knowledge and
Right.
their better operation and cash flow.
I wonder if there's a non-fungible token angle here, an NFT or some kind of blockchain opportunity here.
That's fun because like we never talked about blockchain in e-commerce, right? So like
Not really, but I do, and that we should do that for another show because I think we could go down a really deep rabbit hole if we start talking about what are the opportunities for tokenization for e-commerce, not just for the commerce itself, but for the sites themselves.
for the sites themselves,
Right.
For the brands,
But don't you, for the what?
for the brands.
Yeah, for the brands,
Yeah,
exactly. But the other thing is, we talked about what's the edge on the due diligence side, right? But the other thing that's really interesting to me is, even if I'm a founder of an e-commerce site that's doing good sales, or maybe I have a family of sites that nobody knows about, right? We talked about that. 4 or 5 sites, maybe I have 100 sites.
100 sites, 200 sites, and so on.
Could
And
do that,
counting.
right?
It's
Can do.
It's possible.
Do you know if you have a if you have a multi-site WordPress site, you can actually set up websites pretty easily.
Or you to DrTech, and it's even more easier. It's even better. We
It's
do all
even
the
better.
tech side for you. You don't need to worry about that.
I want to talk a bit about whether the tech matters or not, because I do think it does. But if it's possible that the buyer is going to pay too high a price because the arbitrage is gone, it's also likely that the seller may sell too early and have a little bit of seller's remorse, right? In other words,
Okay.
let's say I'm doing $10 million of sales. If somebody wants to buy my business, I always think this, right? Maybe it's because I'm so deep in the morass of running my business that I just need to step back for like a week or two or some period of time and say, wait a second, if I just change a few things,
It may be much better.
maybe I'm 50 million in sales or 100.
I see what you mean. Like you.
And if I sell and then, in other words, if I'm a founder, right, and I sell to one of these sort of buying and selling e-commerce brand businesses, and then I watch it go from 10 to 50 in like 6 months because of all of the scaling, what's the right word, skills that they bring,
And that you did not have at first, but you could learn.
but that I could learn.
Yeah.
Do I have seller's remorse? It's another risk, no?
It's another risk, yeah, I completely agree with you. What I see from my experience of people who buy and sell e-commerce brands, most of the time they sell it because they have another idea and they want to do something else. That's more what they do. Like they just like to start stuff and they want a good exit. They need cash for the new idea, so they just do it now.
So they sell it.
Yeah.
But doesn't this get back to what we were talking about before, right? In other words, we were joking about the WordPress multi-site because it's so easy to start.
Yeah.
But like some of your friends, right? Let's just say they have an idea, They find the suppliers. They handle the logistics. They make sure the payments are okay. They set up a customer service operation. I'm simplifying, yeah?
Yeah, but that's...
And then they hire a few people because revenues are $5 million a year. They can hire an entire team for $1 million, right? They pay away $1 million in expenses or whatever. They make $2 to $3 million a year.
That's it. It's fully automated.
But now they're not doing it anymore because they've hired a team. So whether it's automated or you've just automated away in a human way, right? Why not just keep that going?
Yeah.
And then build another one and use all the things you've learned from this to do that. And then build 5 and then sell, as opposed to sell for 15, you sell for 75.
Much better, right?
I think.
Or maybe you use the distribution that you just built to then replace the supplier and do your own stuff, right? And then you just increase your margin and your revenue. So the first idea that came in my mind when you say that, the only idea that I have now is that maybe it's because the brain go down and they don't want to go back to it and like get back to the $5 million revenue they used to have, and now they sell less than before, but they still want to do the exit. So you see what I mean? This would be the first idea that I had. The way you just explained it this way.
Why though? I don't understand.
Like maybe like they used to make a lot of money thanks to their e-commerce store. Now the sales go down because they are not involved anymore.
After they sell the brand, you mean?
No. Just before they sell, like they were making a lot of money. They automate everything. After that, the sales go down.
Right.
So they make less money. Either they have no idea how to get back to the initial revenue, or they don't want to go back. That can be a good reason to sell for me.
It's a really good point. So I'd love to know the statistics behind sales ramping. Something's not going so well.
Yeah.
And then can I get back up to here?
Yeah.
Because we know from starting our own businesses, right, that, and even from my Goldman Sachs days, right, even if you have a ton of resources behind you, just getting the first bits of revenue are hard. Growing those revenues in multiples is really hard. But once it starts to tail off, now you start to wonder, is this even a real business?
Definitely, yeah. You wonder, right? So maybe that's definitely related to the age we were talking just before.
Right.
If you wait for somebody to come to you and say, hey, you want to buy my brand? Maybe it's because the sales are going down and it doesn't know how to get back up again, or it doesn't want to be involved into that anymore, which means you're not buying a great brand, right? Which means you're buying something that can be good, but you don't want this one. You want the one that are still growing, right? If you really want to be super good.
So if we look at this from the outside, and again, we're talking about Una Brands, but only because it's a proxy for other businesses that do this, and because it was in the news and they raised a lot of money, right? Yeah. So it's not that we're not necessarily talking about them directly, but what do you think it is that helps a brand scale? Let's say I get to $5 million of sales or $7.5 million of sales. If I sell that to somebody else, what are the key things? Like, does the back end tech matter? Can you what's the word I'm looking for? Can you optimize the logistics to just wring out a little bit more profit? Or is it just like managing the marketplaces, right? Because these small brands, sometimes they just sell on their websites, but sometimes they also sell on Amazon, sell on Lazada, sell like that, right?
Yeah. And I think we can talk about this tech side just after I answer to your question right now.
Please.
Because I think the tech does matter a lot. It's really, 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 really important, I think. And let's discuss just after like how the tech matters in the same idea that we had before when we compare marketplaces and to have his own store, right?
All right, we've talked about this before, but yeah, go ahead. Tell me why the tech matters.
But like, I think the tech matters definitely because first of all, if you want to scale, you get to have a scalable website and servers and infrastructure. And so first of all,
who knows that better than I do, though? All joking aside, right?
And who knows that better than us because we do that every day, right?
Right.
So,
because my website was down. It was up and down for like 2 weeks.
And if you are at the moment where you want to scale the website,
you're done.
Up, right? You're done.
You're done.
So you need, of course, to have the tech scalable. Otherwise, you just cannot scale. But after that, I think there's a few things that you can do that are very, very like kinda easy to see.
Go ahead.
Like, you don't need that to do a lot of struggling to look for where you can grow. It's pretty obvious, I think, for e-commerce. Like the first thing we can do is definitely work on the supplier parts. Like if you can buy in bulk in bigger bulk, or if you can like get some warehouses, some local warehouse or stuff like that, it's definitely improving the margin a lot.
But where's the leverage here? Sorry to interrupt you.
Yeah.
But where's the leverage? You mentioned earlier that one of the problems with running your own e-commerce site is cash flow.
Yeah.
Right? So I buy 1,000 t-shirts from somebody. I sell 800 of them at a profit, but I don't get paid in some cases a week, 2 weeks, depending on what the cycle is.
You cannot buy the new one.
But I can't buy the new ones, and my supplier requires me to pay right away.
Yeah.
But if I grow really big, when does the leverage, and it's a rhetorical question in a way, right? But when does the leverage switch to me where I'm buying 1 million of something, and then I can dictate credit terms with my supplier?
I have no idea.
I don't know either, but does that happen?
I think it does happen when you get very, very big. What I see is that some people sometimes they get a few suppliers because the suppliers are too small.
So they compete with each other.
Yeah, so they compete with each other.
On the supplier side.
Yeah, because and also you need that if you want your business to be reliable. Because if the supplier fucked up, like you get to have a second solution, right, or first solution, or you have to. And these Chinese people are very good at that. They are really, really, really good at making sure that there's 10 suppliers doing the exact same thing, so you can scale your business.
Got it.
It's fun said this way, but it's true and useful for a lot of e-commerce brands in Europe and in the USA, because you definitely have way less risk at working with 10 companies that create the same thing.
So before, you seem to be implying that as you do get scale, maybe you want to take the production in-house. In other words, is there a vertical integration play that maybe works with Una Brands? We haven't spoken to them yet, but you know what I mean?
Yeah, I think you can. I think that's definitely possible. But do you want to do it? Is it going really to increase your margin, especially if you have your supplier in China, for example? It's going to be hard to get better margin on that.
But why not buy the factory in China?
Maybe.
So now you're just supplying to you. You remove the ability for somebody else to sell the same product as you, and you're vertically integrated. So if, again, you look at the Apple model, right? They don't manufacture their own things, but they run the software, run the hardware. They're uniquely vertically integrated. And I think sometimes, like think about the Dollar Shave Club.
Yeah.
They bought the factory that made the razors. And that's why they could charge way less money, control quality, and still sell a ton of razors, razor blades, excuse me, right?
I did not see a lot of people do that in e-commerce. Maybe it's not like the biggest part of people, right? Maybe like just some of them do that.
Maybe.
But I did not see a lot.
But I wonder if one of the things that Una Brands can do
is do that.
Well, it's just do sort of what I'll call functional consolidation. So if they buy 10 websites or buy 100 brands, one payment mechanism, one accounting company, one logistics platform.
And then they can
diversify their warehousing, buy things in bulk. In other words, if you're just buying cotton over here and cotton over there, benefit from the economies of scale kind of thing.
That definitely makes sense. And you control everything. So you don't rely on DHL to ship everything for your 100 stores. You don't rely on the warehouse that you don't know. Yeah, definitely it would make sense. It would require a lot of money, and they just raise
a lot of money. But we were talking about the tech side, but you also know this from building your own tech. Just think about it in the context. It's really interesting about it. If you think about it in the context of a WordPress multi-site, why is this so powerful? It's not the only solution, but why is this so powerful? Because you have this top-level thing that manages everything, and every one of your things that are underneath it, whether it's stores or websites or podcasts or whatever, benefit from the scale that you get from managing it in one place. Yeah. And by definition, it makes everything else
more scalable.
Just more scalable.
Yeah.
Definitely. Right? But then, so here's my big question for these guys.
Tell me.
Right, because a lot of individual sellers or brand creators sell on Amazon, sell on Lazada, sell on Shopee. Is there an opportunity, and I don't know what their business plan is, but is there an opportunity for them
to buy out of Lazada, for example?
Launch their own marketplace.
Or launch their own marketplace after that with their own.
Unabrands.com. All their brands live there. They optimize just for their brands. They don't sell through the other big marketplaces, no matter which country in which they operate. Maybe. And then they try to drive sales there so that now they're not competing against the 12 million other sellers, but they drive stuff just to theirs. You know what I mean?
Yeah, maybe that makes sense.
Because that's where
Yeah.
where the tech edge comes in as well, right? Because if they're
Definitely,
building top line tech for everybody, and they're doing consolidation, I mean, I don't know, just an idea, right?
yeah. Definitely, it makes sense. And as they buy already established brands, which means they already have
Traffic,
awareness, traffic,
customers.
brand love. Maybe maybe there's some people who already love the brand. So like, you should tell them like, instead of going to my website, go to this marketplace. It doesn't change much, right? Like maybe you're gonna have some kind of people gonna say like, oh, I don't like that, but not a lot. You're not gonna lose a lot of customers. I don't think so. So then definitely you can increase a lot the margin by reducing the take.
And then maybe there's
profit,
cross-selling that's available, right? So if you're
let's say.
buying,
Cross-selling, definitely, yeah.
right,
If
if you're buying from this brand, you
Yeah.
should be buying from this brand
Yeah.
using some kind of recommendation engine.
yeah. So
Okay, I get it.
So maybe we can definitely buy 100, 200 stores and then launch our own marketplace to just gather everybody. But then it was another question in my head. Why the guy who already have 100 stores or 200 stores doesn't do that? Because I know some guys who have 100 stores or 200 stores, right?
Right.
We should just do that. So
I know
why,
a guy who has 600 stores.
Oh yeah. So why we don't do that?
Why don't you start your own marketplace?
Why don't I start my own marketplace? I think that's a good question. I think it would be because kinda the reason why, because what we talked about in the previous episodes, when you do a marketplace you have way less branding power than when you get your own
For the
store.
individual sellers,
And
right?
the individual seller, you really lose that, all of the data, all of that. But if it's your marketplace, it's another story, because like
Because then you have all the
because you
data.
have all the data first, so you don't lose that, and you can maybe then brand everything under one brand and benefits all of that. So
But also maybe if you run your own marketplace, maybe you do share the data with your sellers
yeah,
so that they know. In other words, build the better marketplace.
okay,
Right, so that your sellers don't lose data, they get more data, and actually they agree to share amongst each other best practices so that they can all increase their sales, particularly if they're not competing with each other.
and if you own most of the shares of the brands, it's much easier.
Much easier to do that, to control it,
Yeah,
right?
to
So if you own the
control it, yeah.
marketplace and your sellers own the shares in their products
Yeah,
and their brand,
it's much easier
it's much easier.
to do this way.
Just an idea.
No,
So
definitely,
are there
definitely.
any like valid success stories?
Of somebody who buy and sell?
Yeah, or somebody who got bought or sold one, or
The first idea that came in my mind is Gymshark.
what's Gymshark?
But they did not really sell. It does big investors that valued the company over $1 billion.
But what is Gymshark? Are they selling sharks? Are they selling gyms? Like I don't get. They're selling gyms.
Gyms, yeah, it's a gym clubbing. But they started like a few years ago, like maybe.
Wait, they're selling gym
2000.
clothing?
Yeah, gym clothing.
Okay.
So they really launched a really cool brand online for people who go to the gym.
It's like a shark over here.
Maybe.
Maybe
They
lifting weights. A shark
probably have
lifting
that,
weights.
yeah. So they definitely do that, and they launched that I think in 2014, 2015, something like that, maybe earlier. So it's been a while. They were one of the first to do that in Europe, and yeah, they got an investor I think like a year or two ago with a valuation over $1 billion.
$1 billion.
Yeah, $1 billion. They are, I think, the biggest. I think.
So it's actually past the point now where somebody can actually buy it.
Yeah, it's the way to be. And it's a simple guy who just launched that in his room at first.
Really?
yeah.
So he was one of these. He was one of these people who's just like sitting around in his house going, "I want to sell really cool gym."
sleeping with
Does he
the dog.
design the clothing himself? Himself?
I don't know. I don't think so.
But this is
maybe
what
at
I mean.
first. But he really started from nothing. He really started from scratch, from nothing, and grew a brand. And one important thing about that is the tech side was very important for him. Once he started to scale, he moved from Magento to Shopify Plus, the premium offer at Shopify,
Okay.
because he had problem on the tech side to be able to scale even more. So this is where the tech side matters for him.
And what are some of the other models that you can use on the tech side? In other words, and again, here's my idea, right? If you run a business that facilitates e-commerce for everybody, and they're not using Magento, but they're
Yeah.
using tools that you've built, and you create the scaling mechanism. As you update the tech, everybody gets the update.
Definitely, yeah.
So there's some kind of benefit there.
Definitely, yeah.
Do you understand what I mean?
This is what we're doing at DrTech. We build this technology for people to be able to scale their own website, and like kind of like Shopify, we can only handle one page, and everybody can innovate.
So does it mean someone that's building the kind of technology that you're building should actually think about adding a vertical to your business where you kind of coach these businesses that are on the platform into getting to a scale point where then they can then get sold?
We could do that.
You know what I mean? So
Actually,
running your own sort of boutique M&A business. I mentioned that term earlier, but you know what I mean though, right?
Yeah. Actually, like when I saw Una Brands, my first idea was I can do that. And all the age of what we are talking about, I have that, right?
All the what?
All the edge.
Yeah, the edge.
About, like,
because you have the data.
I have all the data. So I can I say but that's the same for Shopify, for Amazon, for all the software company, right? That provide the software that helps the brand grow.
Right.
So all of us, let's say, we all have the data about which store is hot, who is great, who is doing good, who is doing up, who is going down. We know everything about our customer, right? So we can go to this guy and say, hey, maybe we can buy your brand, or maybe you should do that and that and that and that, and it's gonna bring more value to your brands. So that was my first idea when I saw this Una Brands deal. I was like, I can do that.
You can do it, but shouldn't you be the interim guy? You know what I mean?
I can be in between, yeah.
So like, one of your clients is building websites that gets to $1, $2, $3 million bucks.
Yeah.
And you say, I pay you $7 for that.
Yeah.
And then you build it into $20 million, and then you sell it for a hunch.
Una Brands.
To whomever.
Yeah, definitely. Definitely, that's
is that a possibility?
That's completely possible. That's completely possible, and now that we talk about that, I should definitely maybe do that in 1 year
or so. But also, I think the idea that people that build the tech for e-commerce sites and e-commerce businesses should actually run their own mini marketplaces.
Yeah, definitely. I think that's why Shopify does it.
Yeah.
Or you mean the marketplace with...
no, the marketplace for e-commerce. For e-commerce. In other words, not for... Of course, you should run a business that buys and sells
but for
brands. But I'm talking about a marketplace like Amazon, like a mini Amazon or a mini Shopee, because they're already on the platform. And you know my feeling about this, right? You build a vertical business, you build that tech platform, you plug a bunch of verticals into it. These are customers, right? Customer 1, customer 2, customer 3, or e-commerce seller 1, 2, 3. Mm-hmm. And I always say you don't know which one of them is going to succeed, but if you have the platform, if for some reason this fails, you plug in another one. You already have 650 customers. Mm-hmm. So you're already doing this. Why not have an entry point here for customers as well? So on the flip side, say we have belts, we have watches, we have shoes kind of thing, and benefit all your customers without taking gigantic fees, but then run an arbitrage sales business where then you sell it on to other buyers.
Definitely, we do definitely do that. Actually, that's funny that you talk about that, because there is a brand, a software company, kind of like what I do.
What you do.
In France, will launch that this year. They launch a marketplace gathering their customer products. And they didn't launch one. They launched, I think, like 2 or 3.
Marketplaces
in different topics.
Why not?
With like each of the customer products.
Right.
When I saw that the first time, I was like, I think that's not going to work. When I saw that, but I think yeah, I don't really remember exactly why I think it would not work, but I think in the end, yes, maybe it's because your customer have their own store. They're gonna drive traffic to their store.
Right.
If tomorrow you put the marketplace, what do you say to your customer? Am I driving the traffic to the marketplace, or do you drive the traffic to the marketplace? Because if they drive the traffic to the marketplace, they need to be compensated if there is like an oversales. Like for example, if you sell shoes, they sell T-shirts. We make a marketplace. You drive traffic for shoes. You drive traffic for T-shirts. But your traffic by T-shirts.
Right.
Then you gonna tell me, yeah, Marlene, I prefer sending my traffic to my store because my customer buy my products.
Right.
So we need to have a tender system maybe a little bit more complex to compensate them. For
Absolutely.
driving
But
traffic.
strategically, we know, online or offline, a well-curated, this is very important to me, a well-curated mall or marketplace works really well. Right?
True.
People still go, let's just talk about Bangkok. People still go to Central Embassy. They definitely go to M Quartier. They're walking around all different stores, all different shops. Some of them have online to offline, right?
That's true. It does work. Yeah.
And then there's Gayswan, which is just high-end brands. Nobody goes there to like buy Havanas or whatever they call Havanianas or whatever, flip-flops, right? They go there to buy Chanel. They go there to buy Xenia, just the highest level brands. And you know when you walk into that mall, you know, you're not buying school uniforms for your kids, right? So it's the same thing.
We can try.
We should definitely try it.
we should definitely try.
Yeah.
We should definitely try and see how it goes. And like, yeah, maybe all the thought that we have in our head of why it would not work or why it would work, maybe we are completely wrong. And if we told to this guy, maybe they're gonna tell us like, "Yeah, that's a great idea, guys. Let's do it." So,
but I always think so. I had a great conversation with a woman, Dr. Karen Nelson Field, from Amplified Intelligence, talking about the ad business.
okay,
And one of the things you know she talked about was she has done enough research where she can understand. You'll see the equivalency here in a second. But she said through her research, she could figure out which platforms and which mechanism on those advertising platforms of Facebook and Google and, you know, LinkedIn and all these places, which mechanisms were going to work and which got the attention of potential customers. Where likes and community building doesn't necessarily work. As a matter of fact, doesn't work. But if you can literally get someone's attention, she has a way of measuring it with cameras and all this other stuff, that works. So she can then tell advertisers which platform to be on. But I asked her, does the flip side work as well? In other words, can the platform change their methodology based on the research to then figure out what types of tools to implement so that they become a better place for advertisers to be? So my question now is, can we have a quiet conversation with Una Brands or with Shopify or the other buyers and sellers of what they call strong brands
we should.
and growing companies and say,
Yeah.
what do we need to build to get acquired? Because then maybe we should just start churning out those things. We got a ton of good ideas, right?
Definitely, yeah. We can just ask those guys like, "What do you want?" and let us build that.
And just go out and build it.
And let's go out and build it. Yeah, definitely. But I think on the tech side, to be honest, I think on the tech side there is not much stuff that we need to do more than what we do already right now.
On DrTech, I don't think there's anything. I mean,
On, for
little
example, DrTech or Shopify or like all of
little
these
tweaks, but
companies.
otherwise, I think the tech is already
Yeah.
there, right?
I think
If you know how to use it.
Yeah, definitely. Yeah, I think the tech is almost already there. Of course, there's new things coming and updates. Like for example, we talked about live commerce a lot. Like this is something that can get on our platform. But it's not so hard to integrate them. But I think like really what's important for them, like Una brand and stuff like that, is just the brand recognition and how much you get and how much customer you get, how much customer love you and stuff like that. I think that's really important.
So, you know, you can talk about really profitable malls or really successful malls where they talk about like sales per square foot.
Yeah.
Right. So if you go into Gayswan, you're going to have 100 or 200. Well, I don't know what the numbers are, but I wonder if there's a metric you can build. I'm sure there is for an online store, and then build into those metrics that are necessary to get bought. But more than that, convince people to build on your platform or in your marketplace from scratch, because more of your businesses that have been built using your technology or in your marketplace have been sold or acquired.
Yeah, definitely.
So then you become the place to, you become like that offline mall where you put a store that gets bought by some big brand, but you can do the same thing online.
Definitely. Like,
does that make sense?
Once again, like when we did the guy from Una Brands on the show,
we can ask them all these questions.
We can say that, please, like, give me 2 million bucks, just leave it here for e-commerce for like customers. So I can say I have 2 million available to introduce you some great brands. So yeah, so definitely we can ask them that, but it also means I could do the same thing. Maybe I could like raise myself some money as I have the data already.
Right.
I can contact the guy first, or we can teach them, definitely, as you say.
Absolutely. How to optimize, yeah.
Make the tech like super optimized for that, or like we can help them a lot. And after that, I think we can raise the money by ourselves and maybe like buy them or sell them ourselves.
I think more and more people are going to go into this. I like this idea though.
Yeah.
Okay, what else?
I think that's good. That's good. Is there something else you want to talk about?
I mean, there's always more, but I think we've been at this for a while today.
We have been through all your notes.
Yeah, I think so.
You see, my notes are digital, and your notes are paper. And
these are the jokes now you're coming up with. These are your old man, young man jokes. This is not funny.
This is very funny.
You seem to be laughing more than anybody else.
This is not. I feel I'm sure everybody's.
You think other people are laughing? You think the people that are out there on Facebook Live?
Everybody's laughing.
I think what we should do. I think what we should do though is encourage people.
To ask
from now on, we have a decent audience, right?
Yeah.
I think from now on, we should encourage people to type into the chat,
Definitely.
type into the real time place, and just ask us questions as they have questions, right? I mean, I like to say we have great ideas. We don't have a monopoly on the best ideas.
Definitely.
I'm happy to have people interact, right?
If some people want to share ideas, if they want to ask questions, if they want to like express a point of view and maybe different than ours, we are
Absolutely.
definitely like welcome to discuss that.
I don't have the only opinion, right?
Exchange with you and talk with you, and definitely that would be super fun to do that.
Definitely.
So feel free to do that.
Okay.
Definitely.
Martin, thank you so much for doing this again.
Thank you very much, Michael.
Awesome.
It was super interesting again today.
Thank you.
Thank you very much.
Okay, bye for now.
Bye for now.